Hey, hello investors and future investors. Welcome to the channel. For today's video, we're going to be jumping into the options dashboard and I could show you the income that we accumulated for the month of April. Now, if you work in a 9 to 5 or you're trying to make some extra income, this is definitely the video for you. I'm going to show you how you could make additional income by selling options. Now, if this takes your fancy, then welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be jumping into the options tracker. I'm going to show you all the trades I did for April. I'm going to show you the stocks I use. I'm also going to show you the strategies I use. To conclude, I'm going to show you the income that I received for that month. I'm also going to show you, I'm going to prove to you, it does not matter what the market is doing, whether it's going up, whether it's trading sideways or it's going down, there is opportunity out there for you to continue to make consistent income. Now, before we go ahead and get into this video, I just want you guys to know, if you guys need help growing a small account portfolio, that definitely is our strategy. I do offer one-on-one coaching. The link is going to be in the description below. Now let's go ahead and jump into the option tracker. Now to get started, you cannot be a trader or an investor without being able to track your trades. It's just not possible. So here is my options dashboard, and this is the month of April. So we're going to get started how we usually get started. I'm going to show you the returns for the previous month, and the previous month was March. So for March, we worked in a total of $1,884. In order for you to see the entirety of this video for March, the trades I do, go ahead and check the video that says monthly income with options, March. Now let's go ahead and jump into April. Okay, so here we are on April. And for those of you new to the channel, I'm going to give you a brief run through of what this dashboard is. So right here is says open is going to be the date that we actually open the options contract. The expiration date is the day we choose for the option to expire. The close date is the actual date that we close it. Most of the time, I do close my options before expiration date. The days is the amount of days before expiration. The symbol is the tickers that we actually trade in. Those are right here. Under the action column, that's going to represent the strategy that we employed in order for us to get returns or for us to make losses. Here is going to be the strike prices that we chose. The quantity is going to tell you how many contracts we chose to do. This one here is one of my favorite columns, and that's the income. That's the premium at which we will filled. The next column is going to be close. Like I said, most of the time I do close my contracts before expiration date, so I always have to pay a little bit more money back in order for me to close the options. The next column, COL, represents the collateral. In order for you to do options, you need to leave a collateral. The collateral is either going to be in the form of cash or in the form of stocks and shares. Now, the next column is the P&L, which is going to be your profit and loss, and that's going to represent the amount of net income received. The ROC is return on capital, and that tells us our gains or our losses on the actual trade we did. Now, there are some other columns there, which is just personalized columns, and I'm just going to go through that with you as well as the video progresses. So let's go ahead and go into the first one. Now, RGTI, I was a bit of a slob. I forgot to record the date right here before making this video, but here it is, RGTI. We did a CC, which is known as a covered call. The strike price I chose was $11, and the amount of contracts we traded was 4. The premium we received was $22 per contract, which gave us a total of $88 because that went to expiration. I think the reason why this went to expiration, I think this is one of those options that you have to pay to close it in increments of $5. So I have to let it go to expiration. Now, the return on capital is 1.92%. 1.92% is extremely lucrative. If you trade in options for a weekly or even a monthly income, that's very good as opposed to working a 9 to 5. Now, the next stop on the list is going to be IonQ. And for this one, open date April 1st, then expiration the 17th. The date actually closed was the 17th of April, and I closed it earlier in the day, so I had to pay a bit of money in order to close it. So that once again was a covered call. And the P&L we actually received, after everything, we received a net of $68. Now, I'm not going to go through every single thing in detail. I'm just going to browse through it. I'm just going to let you guys know the most important parts. So the next one is AMD. And as you can see here, I have the $90 leaps option. Now, the strategy we used on this was the PMCC, or the poor man's covered call. Now, the strike price I choose for the covered call leg of the PMCC was 118. Once again, if you guys do not know the option terms I'm using and you like to learn these options, just go ahead in the comments below and just say learn. I'm definitely going to reach out to you. So the quantity we did was 2, and the amount it got filled out was $26. The collateral we left was 5150. Now, for one contract, it's going to be 5150 divided by 2. Now, key thing to note right here, right? AMD is a very expensive stock. However, I'm doing a PMCC option strategy, but I'm only receiving a small amount of $26. There is a reason for that. Whenever you decide to do a PMCC, the leaps aspect of your PMCC tells you that you're bullish. So that means you're actually waiting for the share price to appreciate in value, and that's how you make the majority of your money. By going ahead and sell covered calls against your leaps option, you're not looking to make major income. You're just looking to make some small income until the share price appreciates and you're able to close the trade. So do not get caught trying to get maximum income when selling your covered call against your leaps option. Now, as you can see to the ones on the top here, these I own outright. So you could pretty much go for way higher income for these stocks when you own the shares outright. Now, down to the bottom, we have Sound AI, and this has not been doing good. As you can see, the strike price is 11. We still receive money, but I got into this share price at $15.68, and the stock is currently down about $9 now. So you're going to see what I decided to do in the next period for this stock. Now, AI is pretty much the same thing, but we still managed to make some money. Now, I hope you guys are getting the trend right here. These stocks I own outright, I'm able to make income. This is a leverage option. I'm able to make money. These two stocks are currently down in the market right now. I'm still able to make money. Hope you guys have seen the what's in common with everything. Does not matter what the market is doing. There is opportunity for you to continue making consistent income. So we have Mara here. We did a covered call. We received $28. We have SG here, which is one of my favorite stocks out there. And I like it because no one is actually talking about it. I actually did work for this company. So I know the inner workings of this company. This leaps option, I'm currently down massively on. So I had to make an adjustment to it. And you're going to see that in the second period of this. Now, the next one after that is going to be MU, which is Micron. And the leaps option, I got it at an $85 price. I am doing the PMCC option strategy on it, and I received $25 for a net return of $50. Next, we have what used to be one of my favorites, and that's going to be Robinhood, and I got this at the $40 leaps option. I did get a very big premium for this, which was 282. Now, the premium here is extremely high at 286, as well as the premium here, 282. The reason why these are extremely high, and there's a third one right down here, is because I did an option strategy, which is known as rolling. My covered call aspect of the PMCC was getting in danger. So as opposed to me losing my leaps, what I decided to do was to roll it out. Now, just go ahead and look at my videos on the channel and type in roll, and you're going to see how to do an options roll. Whenever you roll, the key thing to do is make sure you get credit for that roll. So I got additional credit. That's why these are so pumped up: 286, 282, and 294. Then we also got this, which is TD Free Desk. Now, Free Desk presented an opportunity. The stock absolutely tanked. It got beaten down. So I saw an opportunity. So I bought a long call. Now, a long call is just a shorter leaps option. That's all it is. And I did decide to go ahead and do a covered call on this. Now, covered call on a long call is going to be a calendar spread. Covered call on a leaps option is going to be the PMCC. Hopefully you guys got that. Okay, so the total income for the first period is going to be $1,174, which is not bad for a market that's in decline. Now, before we go ahead to the second period, I want to bring something to your attention. So, I did mention that everyone needs to have a tracker in order for them to know if they're losing or they're gaining. Now, what I went ahead and did with this tracker is I put in my average cost because the market was in decline. So, when I acquired RGTI at 4,000, and that gave me an average price of $11.46 per share. Now, since the market was in decline, RGTI dropped very drastically, and the share price, as of making this video, went back up to $10, but it was trading below the $9 mark. Now, what I went ahead and did is I went ahead and get what's known as an average cost. Now, your average price can be found by adding up all the premium you receive, you subtract it from your collateral, and you divide it by the amount of shares you have. And that's going to give you your new average cost. So my new average cost on this was $9.55 as opposed to $11.46. What that does is that now I'm now able to sell covered calls at a price of $9.50 or above. I don't have to go all the way up to $11.50. Hopefully you guys understood that. Now that's also the same for the other stocks down here. I did go ahead and get the average cost of this. Now let me just show you what I'm talking about to get the average cost with RGTI. So let's go back to March, and you could see here that I did sell options in March. So what I pretty much did, I added 92 and the others up here. Let's go to February. RGTI once again, I added the 60 and the others. So you get the drift. I added all of that, subtracted it from the collateral, and then divided by the 400. Now, this only works if the premium you receive stays in the account. If you were able to withdraw the money and spend it or use it for personal belongings, then that's not pretty much going to help your average cost. So it only works if the money stays in your brokerage account. Now let's go ahead and get into the second period to see how we did. And for the second period, it's pretty much the same stocks, but I did make some serious decisions. So let's go into the decisions because you guys by now should know what all these things mean. So decision number one, PMCC. I was extremely up on this. I just mentioned that I actually made about $1,500 for this, so I actually closed it. On this here, the sound, which I just mentioned, I did get into the stock at $15.68, but the stock was trading below $9. Now, in my personal opinion, I think Sound is a good stock, and I do believe that the share price is going to get back to that 1568. The only question is when. My only thing, I don't have enough time to wait around until it goes to back to 1568. So what I did, I went ahead and I sold it for a loss. The loss I sold it for was the loss I had to eat was $2,940, which is a small loss. The reason why I went ahead and did that as opposed to waiting is because I know this is only $2,900 and I can make that back very quickly, probably in less than 3 months. So that was decision number one. Next decision, MAR. The market reversed itself. So I actually got assigned right here. So I no longer have MAR. AMD, I also got assigned on AMD. So I no longer have that. Now, what I'm showing you here is simply premium. These are not the investment gains. I do have investment gains in addition to these. So the way how you make investment gains, if I sell at 100, I bought at $90, there's going to be a $10 spread. So that $10 spread is going to be my investment gains. Of course, there's other factors that go into it, but that's just a brief explanation. So that's pretty much it right here. And then there's also ARM. I actually closed off ARM because I was able to make a $1,500 income. So I actually closed it off. So the amount we did for the second period is going to be 897. So that is not bad for a market that's constantly in decline. So the total we made for April is going to be, let's go ahead and see what it was, $2,071, which is not bad. So there you have it. When trading options for income, it is possible for you to make consistent income. If you're working for a 9 to 5 and you need help with this kind of stuff, you need to make some additional money to complement your 9 to 5 salary, then you should strongly consider trading options. Now, by trading options, I don't mean by buying options. Learn the strategies, learn to sell options in order for you to get consistent income. And once again, if you need any help with that, then feel free to reach out to me. I do offer one-on-one coaching. Now, if you guys have any questions, let me know. Now, let me just go ahead and show you guys at least one of these. I'm going to show you the $1,500. Let's show you the ARM one. I'm going to show you that one. Let's go to my Robinhood account. Let's go to ARM Holdings, and I'm going to show you the returns for just that one. Let's go ahead and let's scroll down, and it should be coming up right now. And there you have it. So right here, I close it, $1,525. So the reason I'm showing this is not to brag. The reason I'm showing you this is to show you that income can be made by selling options. Here is an additional money I made when I actually rolled an options. I got an additional $300. Let me just open this one up right here so you can actually see the trade and all its details. So here you go, the trade and all its details. So there you have it. So for those of you that made it to the end of the video, you guys are the real investors. You guys are the real traders because you guys are willing to learn what I'm here trying to teach you for free. All information I gave you here is for free. So if you guys want to pay me back, it's quite simple. Go ahead, like the video, subscribe to the channel. But most importantly, if there's anyone out there you know struggling to grow a small accounts portfolio, let's help as many as we can. Let's go ahead and share this video with them. Now, until the next video, keep pushing your investments.